Okay, good morning, everyone, and welcome
Good
to.
morning, Ash. Good
Oh,
morning,
good
everyone.
morning. Yeah, good morning. Mate. How are you this morning?
Well, it's a little bit past morning where I am, of course, but I have my trusty cup of tea at hand and I'm going okay. How about yourself?
Yeah, I've got a coffee by my hand, news on in the background, and also going okay. We were just talking about this market. I open it up, and I have to say, actually, you were just talking about a potential reversal going on here, and I've got a couple of things to discuss with that. But as I open up my screen here, I see a pretty loud shouting head and shoulders pattern going on.
On footsie?
On the FTSE,
Yep.
yeah, and that's not something that I noticed until I've just opened it up here.
Yeah,
That
it's certainly there.
doesn't really encourage me to go short. I have to say. I mean, it's and I'll talk about that in a moment. But let's talk about this pattern to start with, and we see it multiple here. Left shoulder there, head, right shoulder, and that hits the measured move, I think, and probably maybe even beyond. Let's have a look. Now we were talking about this on the Master Trader course. PH was talking about the and this is traditional. You know, a lot of people would measure the distance to that point from the bottom down here right up to the head. But I don't do that. I measure it along the shoulder line to the neckline.
Hmm.
And actually, I just find that if you go on this basis, it didn't quite come. It went a little bit further than that in actual fact, but the closing price really was around that area.
I have a
And
feeling
interest,
we did this on Thursday, didn't we? Did we have a look at this chart on Thursday and say this looks
we
a
did.
bit toppy?
Yes, we did. Yes, we did.
Yeah.
And it did come down. It's still within a range, and we'll talk about the range in a moment. Unless you've got anything pressing, actually, have you got anything pressing there?
No, mate, I've only just opened my charts. It's
Okay.
typical Monday for me. I'll just have a little look at see what's going on.
Okay, great. Um, there is a level of support that I don't think we're going to get away with ignoring. I don't really see this head and shoulders pattern working out. I actually see it coming in, dipping down to this area here, and then the buyers starting to step in around about the 73, 77. So I think in around about 8 to 10 pips. I may well take a long at this point. It is difficult because the news and data continues to support a market that is pushing to the upside. What's interesting is that I think a lot of traders probably got into this, possibly too early when we look at the daily chart. Um, Now, just incidentally, actually, while we're on the head and shoulders pattern, if we were to do the measured move along here instead, then it would lead us more like down here, which is just a little bit too low. And if you follow that kind of thing, I think that you're probably going to be disappointed more often than not. And I think this conservative way to do a measured move on a head and shoulders is a much more profitable way to do it because it just deletes the risk a little bit. So let's talk about the longer term patterns here and just expose what I'm seeing. This weekly bar is the problem. Looking for upside with a weekly bar like that is not great. It's not a particularly negative looking bar in some respects because it doesn't end at the lows. It really is quite a wide bodied spinning top, and the spinning tops kind of formation and spinning tops look about it is more like that. You're much more likely with a spinning top to kind of see a small looking body in comparison to a longer looking tail. And it doesn't matter with the spinning top if the tails are equal. It could even be something like that. But that's a much easier spinning top to kind of read. Here's an example. So spinning tops look like that. Now spinning tops just indicate indecision. They don't really tell us direction. Indecision at the top end of a market, yes, you could probably read that as slightly more concerning. but you know, for the trend to continue. But it doesn't really tell you to trade short. So what will happen here? What's much more likely to happen here? Here's another example. When this spinning top formed here, interestingly, we got this shooting star, but that shooting star kind of got pushed to the upside, and that does end up having a bullish connotation. So when the market pushes down, people are looking straight away in the next session to buy up. But with this spinning top, it needs confirmation, and the confirmation comes from breaking and closing in either direction. It doesn't really make the longs that palatable. That's the problem with it. But in saying that, it's a weekly chart. So because it's a weekly chart, when we come down to the dailies, this daily really provides us with a hammer. Now, it's not a great hammer because it's not really in the middle of nowhere. But what's interesting about this hammer is that it tested the closing lows of the pattern. So this is the closing low. This hammer tested it and rejected it. So that really does give us a fairly strong indication that that this level is the level that we need to watch. Now that's around about 40 pips below where we are now, and if it's going to break down, it's going to have to break through this area. And I'd much prefer to see you know, a pattern which is slightly longer developing, if or I think it's more likely that we see a pattern which is slightly longer developing. So rather than looking at the head and shoulders pattern on an hourly or a 4-hourly chart, I think if we look at it on this daily, then this would suggest that we could be looking at you know, maybe by the end of the week, the pattern's much more likely to have success in forming, which suggests yeah, and that suggests wherever we are now, there's probably another push to the upside. The high of the left shoulder, the closing high is around about 7,400, and we're around about 73.85. So we've probably got around about 20 pips to the upside. If it dips down 10, then a little bit caught in no man's land, you know, in between the pattern, which is going to make it tricky to trade. However, it does look like, just on price action alone, that this area around about the 73, 77 is the buyer zone. Now let's talk a little bit further about that particular point. When we look at the detailed chart, the detailed chart also is telling us that that 73, 77 gives us a buying opportunity because the daily pivot sits around about 73, 79. So we're probably looking along here for confluence, and we've got a few things that suggest here as well. You know, when we drag and extrapolate a trend line along here, that would suggest that we've broken through. Actually, in second look at this, not very convincingly by all accounts. Quite a few shooting stars though, but we are above the pivot. This is the funny thing. You can look at a chart once, and it's well worth looking again, isn't it? Because you know, you might see something completely different. And this weekly pivot, this is the 7404. Does suggest the weekly pivot. So this is the way I would read. Yeah, look at that. The pivots are sitting really exactly where the head and shoulders pattern are suggesting that we would get to and from. So what this is saying to me is it comes down to the daily pivot. It bounces from that point up to the weekly pivot, and then we get caught in a little range between these points. Now let's talk fundamentals, because it's the fundamentals which are suggesting to me that the move to the downside is at least on hold, rather than a surefire thing here. So this number here, huge beat. Advanced GDP quarter on quarter 3.2%, forecast at 2.2%, and the previous was 2.2%. So let's bring up the GDP chart here. Pretty healthy, isn't it?
Oh yeah, my word.
And that does not suggest that there's an economy that's floundering there.
No.
It's so interesting, though. You know, that the commentation, the commentary that I keep hearing is that the Fed is much more likely to cut rates than raise them. And yet, when I see these numbers, I look at it and I think,
I'm going to say even since Friday.
Even since Friday.
Wow.
Yeah, even since Friday, as late as this morning, I heard that the next move that some commentators are predicting is a rate cut. What they're not predicting by any stretch is a rate hike. And when we look at these numbers, these numbers don't suggest that the economy needs to have a rate cut. So that they are looking really to kind of hike up rates. I'm just looking back to see what the other kind of important metrics are. It could take a while to get there, so maybe we're not going to find them right now. But here we go. Retail sales positive. Retail sales month over month positive. Huge beats in both of these two numbers here. Flash PMI was a little bit weak, so the some of the business leaders maybe slightly weaker, but let's keep going back a little bit here. Just before we discuss what we're going to look for this week as a potential driver. CPI is there. PPI, so Purchasing Managers here is sorry, the price index here is at 0.6, so that was a beat. When you look back on these numbers, they're pretty good. Here we go. CPI month on month, 0.4%. Okay, so that causes a problem. Yes, it is a slight beat, but it does cause an issue. A CPI figure that is only raising up there. Now, what I really want to see is CPI year on year, and I don't know what month that was. Reported in. But let's have a look anyway. Let's have a look at this week. What we are seeing though is interestingly a growing economy. Growing numbers. Let's say we got CPI month on month, which is growing. We had the retail sales growing. We had the GDP growing. So it doesn't suggest to me that a rate cut would be the wisest move for the Fed, but the Donald Trump aspect and effect has to come into play, and I don't know how deeply that does come into play. But it may. You couple that in the fact that there's a potential Chinese and US trade deal in the offing. It doesn't really suggest to me that there's an opportunity or reason to be selling these markets off. Now, when we look at the news events this week, we've got nothing really today or tomorrow that is
End
like
of the month, isn't it?
Yeah, the end of the month is quite interesting, and maybe we head into sell in May, walk away kind of territory. But ISM manufacturing on Wednesday, FOMC statement. Now this is going to be very telling. So this is what people are going to watch, because any dovish statement from the FOMC is much more likely to drive these stocks higher. If they talking about rate cuts, then that is a chance for people to put their money into stocks. Now, that doesn't mean that they're going to cut the rate on this particular meeting, but it could mean that they discuss the potential for them cutting rates in the future. They've already said that they would leave rates on hold, which managed to cause a pretty decent rally in the stock market. And that may well continue. So I'm really looking for catalysts right now for downside, but they don't look to me like they're appearing, and all I keep hearing is further catalysts to the upside. So when we look at this rally, yes, it went too fast, too far. However, the news and data now looks to me like it may well be catching up with it. And if that happens, all this now looks like is a lot of very savvy investors getting in nice and early. And rather than this being the top end of a market, we might well see this being just another point for it to break out. So few more bits and pieces need to still come out. Everybody's talking about the end of the business cycle. Everybody's talking about earnings season being poor, which it wasn't. 80% of S&P companies reported much better than expected earnings. So I just don't know where the weakness comes from, mate. The softening comes from maybe the summer effect, but is that enough really to kind of suggest that we should be looking for downside stock market? Not to my mind. I've been constantly waiting on this number here to come in, but we're a comfortable 100 pips away from that point, even when we come down to the lows here. And is it likely to happen? Well, yes, but not from what we've got recently. Not from the news and data we've got recently.
No, there's nothing glaring and saying, "Oh my God, I've got to sell this market right now." It doesn't seem to be the case.
No, absolutely not.
But, I guess at the same time, when you think about the May thing, the end of month, the closing of the business cycles, or when you think about those, I suppose they're telling you maybe it's not such a great idea to be looking for new highs either. In fact, all-time new highs.
This is the point, but my problem with the business cycle discussion is that the end of a business cycle or the latter stages of a business cycle has to be confirmed by weaker numbers, and those numbers aren't weaker. And
Yep.
you know, it just seems that the Chinese intervening as they did, the Donald Trump and Xi Jinping potential trade dispute managing to clear. It just seems that you know, that things are probably not ready to weaken. You know, it doesn't.
Can you bring me up to speed on that? Sorry, while you're going, the Xi Jinping thing. What happened?
Oh no, just the fact that they're looking to actually get a finalised deal by the start of May. So we're only a few days away from that, really.
Nothing new, right?
Nothing new, but just that date starts to close in.
Yep.
That date just becomes a little bit more in focus. So,
well, is there an actual date or just early May?
There is an actual date, but my memory doesn't serve me that well. I thought it was the 4th,
yep.
but I think I'd remember that because that's May the 4th be with you. But you know, something tells me that it's the 4th, but it's around there. It might be the 7th, but it could be the 10th.
Good on you. All right, so we'll be looking to trade on all those 3 days.
Yeah. Well, do you know, this is the thing. It's so kind of broadly telegraphed that I'd be surprised if that actually did have a huge effect. But it probably will. It will allow the market to continue to rally, if nothing else.
Well, when we see the content of it, you know, surely there'll be market reaction when we see the content, because it will be read. It will be read in a fashion. You know, the market will think something of it. There's no question about that.
Good point.
It'll either be okay, Trump's got his way, or okay, China's actually got a bit of a good deal here. So that the market will react to whatever it says.
Yes, it will. You're absolutely right. I mean, I suppose the bottom line is that apart from, you know, some sectors that may well, you know, I suppose for every good that happens from any agreement, something bad has to counterbalance it. As you know, as a Game of Thrones aficionado, you know, they sort of they have to negotiate
today. Yet that reminds me, that's something I can do later tonight.
Oh yeah, do you know what? I hired the first series from the library and we started watching it, and it is brilliant.
Yeah, it's amazing, isn't it?
Yeah, it's very, very good. Yeah, we just got to the bit where Sean Bean's had his head lobbed off.
Poor old fella. He didn't last too long, did he?
He didn't, and you know, I think it was a bit of a shocker for. I knew it was coming, but my girlfriend was absolutely gutted because he's so noble that he's the favourite character.
It'd be good to go back and relive all that. Actually, I'll get an update of each and every Monday, so where you're up to.
Yeah, well, it'll probably be on hold now for a couple of weeks because I have to prepare for IFP, and it's going to be in a couple of weeks, but we got to make sure that the preparation is good and proper. So I think we'll watch this first series, give it a break until I get back from Singapore, which is going to be start of June.
Cool.
Yeah.
Well, you've got a long way to go, buddy.
Yeah, which I'm looking for. You know, I'm looking forward to. I hear it gets better and better.
It's a shame it's not winter, because you could bunk down and really binge out on it.
Oh yeah, that would be good. I mean, it's difficult to binge on anything when you got a 2-year-old, unfortunately, because
yes, absolutely.
You know that your time is so you know stolen from you.
It's
truncated. Yeah.
And starts, isn't it?
Not that we'd allow her to watch it, but we've had to ban TV from her eyes because of the sheer belligerence that she expresses after watching Peppa Pig.
Okay.
So you know what? Funnily enough, Peppa Pig's banned, but Game of Thrones isn't, and you know.
Right, that's saying something.
Yeah, that's what it's like in our household. You don't step out of line.
It's a good practice.
At least her head's not going to get chopped off.
You don't want to finish yourself lucky. Stuck, no. Anyway, I suppose we could have a look at some currencies, could we? As I say, it's a Monday, and I don't normally get to the charts till about now.
Yeah, so we should. And I want to talk to you about a little bit about the about the Euro and what happens when we lose Mario Draghi. I think we should have a little chat about that, because that's coming up pretty soon.
That's now what, 5 months away, 6 months away.
Pretty close, right?
Like yeah, getting there. That's a fact. All right, let me see if I can pinch some screen here, and let's go straight to the top, shall we? We'll go to cable and see what's going on there. I said when I opened the charts, it looked a little bit like potential reversals, and this is kind of one of them. When I say reversals, I mean reversals of the momentum. The overall trend here is still bullish, of course. If we go to the weekly chart, you can probably see that, but it's not convincing. I mean, we're at the top of a range here. We're in mid-range here. Where do we go next? Not sure. Really not sure. But the momentum at the moment, certainly in the last month or month and a half, really, has been to the downside. And this little doji bar here is suggesting that may slow down a bit, and we're seeing that, of course, in this rally that's taken us back already to the weekly pivot. That's kind of interesting. Before I would be calling rather a reversal here, I'd certainly want to see a higher low, for instance, to get me in that frame of mind. But the last two candles are not that great in terms of, sorry, this candle is not that great in terms of, all right, we're ready to go through this level, which is what, 1.2940, call it, maybe 50. They certainly gave that a short shift as soon as they got there. That's probably this low here. Yeah, pretty much. So it doesn't like it above there right now. We're having another crack at that, of course, today. Would I like to have a directional bias here right now? Look, I actually don't see one on an intraday basis. What I do see is that there and that there. This level that we're currently at, the weekly pivot, and really that's all I'm seeing, where apart from the potential of reversal. So if we dig down a little bit deeper and see what our daily bias might be, we can see the reversal bar here, the hammer's sitting there. We actually do have a higher low on the 4-hour chart. I'd be prepared to say that this could go long to this level here, and maybe even the red line I've got in the chart. I might even leave that there, actually. That looks to be, obviously I'll put that there for a reason last week. I want to get a hurry on if it's going to meet that price in time mark, I'd have to say. But I can definitely see this area here. Let me just make that visible to you. There we go, that's a bit better. So let me give a little bit of an indication as to when that might happen. Maybe Wednesday, I'm looking at that level there. I think I could go with that as a bit of a theory. You can see that there's a resistance level here. So today, I'm probably in a mind to go to 129.50-ish. We're currently at 129.37. So I don't see anything there that really excites me. I don't want to be trading here for about 10 or 15 pips, unless I've got a pullback and I can get in much earlier, say down here somewhere, which kind of makes sense. We've got a little trade line coming through here, which is obviously holding price up at the moment at this former support level. Look, I can see price getting to here by Wednesday, not necessarily today. I can see price getting to this level today, but really I don't see too much more than that. So I'm not that excited by this cross right now. Let me have a look at the 30-minute chart. So if it did break here and look at this level, that's the one I'm talking about. we've got about 24 pips from this current position, but I wouldn't be going long here because I'm at a created resistance level, which has also been support through here. So there's no way I'd be looking to go long here right now. What I would prefer, if I do have a long bias, which I guess I do, I'm not over keen about it, but I probably need to get down to here and maybe play a false break. So that's my plan. If I am to go long, I'd like to see price break down, take this level out, maybe hit this one, then get back above and retest the confluence area. We've now got support trade line, resistance trade line, weekly pivot. That's the key area for me. So that's what I want to see. I want to see price get down here. Doesn't have to go to that support level, as long as it gives me a little bit of consolidation in this area, gets back above those two lines, retests them. Then I can look to go long. There's not a lot of room though, because I don't want to be trading into the high of the day either. So it's not going to be easy. Good old cable, I'm afraid. Let's see what happens. But I have a plan, but I don't think it's terribly concrete and user friendly, to be absolutely fair with you. Let's look at the euro. And the euro, as we said last week, looked to be in dire straits, absolutely in trouble. And it just hanging on by a thread here. This being the weekly chart. Actually, I'll go a little bit wider. This being the weekly chart, you can see where last week's candle took us. And really, this is the thread it's hanging on by. It's hanging on to this low and this low here. It's the only level I can see across this chart. Maybe one in there, but it's not strong. But this one, it's probably where and why we're faltering at the moment. If we are disappearing, and I really think we are disappearing, I don't think this level is going to be strong enough to hold this market up, to be fair. So, bearish bias, but thinking maybe a little bit of a retracement here, but not substantial. So let's look at some resistance levels that we might be able to trade this to if we have a long setup of any kind. You can see the weekly pivots giving us immediate resistance. You can see a trend line coming through here that's giving us resistance as well. You can see a horizontal level, probably in there somewhere, but also in there. Well, let's call it that one. Would be a little bit generous. And again, we're seeing a confluence over here of horizontal level, which is 112.30-ish. Is that right? No, 112. God, I can't read that red. Okay, it's my thing. I have to fix that. So around about 112.13 is where I see this potential reversal going to, but nowhere beyond that. We're currently at 111.60. Do I want to jump in and trade that? No. Why? Because look at the bearish momentum here. Do you see a reversal candle here? I don't. Do I see a reversal pattern here? Not on that chart. How's the 4-hour chart looking? It's a little bit better. We've certainly got the double bottom sitting here. We've also got a trade line that's being challenged at the moment at a horizontal level. So we are at a confluence area. It's only small time, but it's there. 111.60-ish. What am I expecting? Well, if you have a look under here, I've got an untested daily pivot. That's my first observation. So what would I like to see? Look, this is tough because you've got a strong resistance level above you that the market will see, and the market will want to test that level. You've got a strong support level below you, and ditto, the market will want to test that level. On the 30-minute chart, you've got a double bottom, you've got a higher low already, you've got another higher low. Maybe you've now got a lower high. It ain't easy, guys. There's no way that I can see a clear. I can see trades, but not ones that I would really like to take right now. You know, there'll be people thinking, okay, reversal bar here, we're going to the daily pivot. Certainly I can see that, but I can't trade that because I can see this level here as well. Which one's going to happen first is the question, right? So the answer to that question is it doesn't matter as long as one of them does happen. And if one of them does happen, you've then got a directional bias. The directional bias has to be back to the other one and vice versa. If you get that test, the directional bias is going to be in that. So I have to wait for that. I really can't trade until that happens because both of them magnetic to price. So that clears that one up. Looks like I'm not trading too much today, Ash. That's not unusual for a Monday. The Aussie, retesting the bottom of the broken range. False break, false break, false break, false break, potential false break coming again. I kind of got the feeling that the Aussie's not done with yet. And I don't really have too much to base that on, to be fair, from certainly a fundamental point of view. And the technical point of view is one, and I pointed this out the other day, of all the majors against the US dollar, this looked to be the one that had the best chance of, inverted commas, survival because of all these false breaks at this level. There's a popular theory, of course, that suggests the more a level is tested, the more likely it is to break. Look, I don't disagree with that, but there's also, well, let's quote Mr. Isaac Newton: for each and every action, there's an equal and positive opposite reaction.
So, was that him who said that?
Oh, I think it was.
Oh, was it? Okay, I'll quote him. I always say that to my daughter when she bites me.
Was it Newton?
I don't know. I don't know. It sounds like the sort of mad theory you would come up with.
Shit, now you got me. I'll worry about that one later. But
yeah,
I'll Google that for sure. But you know, the same applies in the opposite direction. You know, if you're saying the more a level is tested, the more likely it is to break. Well, surely the more it's rejected, the more likely it is to reject it again. You know, that's just plain logic to me. I don't get the excitement about the more levels tested, the more likely it is to break, because I can give you the argument in the opposite direction.
Oh, I completely agree, mate. But because, you know, if we go on the philosophy of the longer the stronger, then that means that it's been tested for a longer period of time. So that level becomes stronger, doesn't it? I mean, if it does break, then all hell can break loose.
And that, I think, is why it's such a popular theory, because when it does break, it gives you a big result.
Yeah.
And that's likely to happen. But why now? Why on this test? You know, that's the key question for me. And the only answer to that is what you said before, the continued strength of the data coming out of the US.
Yes.
But you've also got to have a look at other things with the Aussie, because it's a commodity-based currency and a risk-off currency. You've got to look at those two. Risk-on currency. You've got to look at those two components as well.
Yeah.
And if you have a look at what the equity market will tell you, what things like iron ore, or things like gold, things like
copper,
copper. We've got a shitload of stuff here, coal. All those sorts of things. If they're going well, so is the Aussie. There's no reason why. And it's a very simple equation. People buying stuff from Australia have to exchange to Aussie dollars. That's trade. That originally is what drove this market. It was all about the trade price at the coalface, so to speak. So you've got to take those things into consideration as well. And look, to be fair, I haven't looked at the commodities market too much at all in the last month, but I believe that iron ore is going pretty well. I'd have to check that, but I got a funny feeling that there's not too. Although I think commodities might have come off a little bit in the last few days or a couple of weeks, but and I think we're probably seeing that in combination with the US data. But anyway, back to the technicals, and the technicals are telling me that this level is absolutely key to this cross, and the more it goes knock, knock, knock and refuses, then the more I think, well, okay, we've got a chance of trading this to the high side. The one downside I would say about that comment is this particular scenario. And gee, I wish I could, I'll do it this way. I wish I could have a pen. Pen would be great. This isn't fantastic because the pole's a bit offset, but it's reasonably clear. And we're going to get into a conversation now about what this actually means. It's reasonably clear to me that we've got a descending triangle here. Although, as I said, this side of the triangle ain't great because it's offset a little bit. But it's pretty clear that when we have bounced off this level, we've had a big bounce, we've had a lesser bounce, and we've had a lesser bounce. That suggests, of course, to me, that this is likely to break at some stage because we're not driving the market as high as we used to drive the market. Now, the interesting part about this, of course, is it gives us great target areas if we are to get into the market. So if we want to trade from here to here, I can absolutely mount a case for that. And then I could probably mount a case for trading back to this level. And if I did do that and I found a position from here, then I would have to leave something on the table just in case this is the break point. And it's likely to be. It's more likely to be when you look at that scenario than it is when you look at the scenario without looking at that triangle. Essentially, what you're looking at is lower highs and equal lows. So that does suggest that, yes, the market is strong here, but it's getting weaker at the top, or it's getting the resistance getting stronger rather. And we're getting closer to the point where this will break out either way. And that may be a fundamental push. We've got the Fed statement coming up. As Ash said, if that's more dovish than otherwise, you can probably see a little bit of a rally in the Aussie. If the statement is in tune with recent economic data and the Fed starts to think, my goodness me, we're going to have to react to this, and says as much in the statement, then bye-bye Aussie, bye-bye Euro, bye-bye cable, if that's the case. As soon as the Fed hints that they're back on a monetary tightening position, then it's bye-bye for me at these levels. So that's what we're looking for in terms of the end of the week. Of course, we've got NFP as well. So this is far from clear, in my humble opinion. But what is clear is that we should be able to trade this with confidence off these levels. But they're getting very, very tight. So you're talking 30-minute timeframes, 4-hour minimum. You know, let's have a look at that. So you can see the bottom here. You can see not really reversal pattern. You could kind of call that a tweezer bottom if you wanted. This is a 4-hour chart, so it has got some meaning to it. But you can see what's happened. We've hit resistance, bang, straight away, very, very quickly. This was Friday. This was today. This is today, of course. So we've bounced off that level on Thursday. Thursday's low has just been profit taking, one would suggest, because we are at this level. But we've gone straight back to resistance. Now this is probably pretty cool, because we can, as I said before, look for one of two things. We can look for a higher low here and look to trade it long, or we can look to trade it back off this level. I wouldn't go too much further than the daily pivot, but I wouldn't want to be doing that on the 4-hour chart right now because it's not there. But what is there is a very clear test and rejection of the weekly pivot on the 30-minute chart. That doesn't mean I'll just jump in here and trade short. What it does mean is if we were to get confirmation that there are sellers around here, and that would come in the shape of a lower high, probably. That's what I'll be looking for. Have I got enough room to trade to the daily pivot is the question. I've got about 15 pips. So if I had, let's say, a 10 pip candle, there's nothing wrong with trading to there. I don't have a problem with that. The other way to do it would be, as I suggested, I think on the euro, wait for the daily pivot test and look, if you've got a long bias, that is, wait for the daily pivot test and look for reversal at that point. I think I'm probably more likely to trade the Aussie than I am to trade the pound and the euro at the moment for that reason. It's pretty clear where the levels are, and the other two are pretty tight on that. So I'm okay with this. Let's see what we can find. We've got that, which of course is dead set in the middle of the daily pivot and the weekly pivot, which makes it a bit tough to trade off because of that reward to risk scenario that I spoke of. Look, I think the best case scenario here for me would be really, I'm trying to make a case for it. Let me see if I can pull in some more data. That doesn't work. Kind of does, but I'm cheating. I think the best case scenario for me is going to be this, not the lower high that I spoke of, but if I see it here with a reversal bar, I'm probably happy. But the best case scenario for me is let this break. So allow the resistance trend line to break, find resistance again, maybe DR1, maybe this high, maybe just the fact that there's resistance here. Pauses the market, then we pull back below the trend line and the weekly pivot, the confluence area. Look for the lower high here, or just accept the retest of the rebroken trend line at the confluence area and look to trade it short to the daily pivot. That's there for plan A. If I see that, that's what I'll be looking to trade. With the thought process, of course, that I'm really only looking for a rejection of this level again. So I'm looking for a higher low here. But I also like to see the daily pivot tested. So let's keep that in mind. If we get that false break scenario, trade it to the daily pivot and then wait and see what happens. So there you go, mate. They're the three majors. That's kind of what I've got in my head because of all that line drawing and analysis.
Yeah.
Not too keen to trade on a Monday as always, but yeah, I can see little targets for Wednesday really. Up here somewhere.
Well, there's a couple of things I wouldn't mind talking about. One is going to be gold, and two is the euro, as I said earlier, and maybe three is the Aussie. So maybe more than a couple of things, a few things, let's say.
Yep.
Gold looks to me like a buying opportunity right now. I'm bringing my chart here. Daily charts does suggest that we do have some weakness, and we may not be aiming for too much, but I think we could be aiming for this trend line up here. There is something of a reversal pattern going on here as well. Seems to have broken through that level. Let's see if that becomes at all palatable there as well. Maybe. Might be stretching it a little bit, so going to be quite difficult to find the trend line down there. But I quite like it when I look at this on longer term time frames. The weekly, probably most specifically here, it didn't really take out these lows, and if anything, that this almost looks like a bit of a classic, not slingshot formation, but something like it, isn't it? Where we sort of like break the trend line, come back above it, and then maybe this is a weekly chart, so maybe you need this to look on a weekly chart. But certainly testing this level to me looks like a decent area to look for the longs. And I bring it into focus with the 4-hour chart, because the 4-hour chart has given us a little rally to the upside, break to the upside, another high there. Huge fluctuations here as that GDP number comes out, but it does end up higher. And this small retracement here, to me, is now looking like a buying opportunity to trade into this level up here. So I like gold. And what was interesting as well for me with gold is that now I don't know whether I was trying to find reasons for this to rally, but there is a little bit of nervousness out there. And some of that nervousness may have come from the fact that North Korea President Kim Jong-un met with Putin, and seems to have ramped up some of the negativity between North Korea and the United States after that meeting. He seemed to be quite kind of quite aggressive. Some of his language was quite aggressive about how the USA haven't complied with some of the agreement. And I don't know whether that did see gold rally necessarily, but what I do know is that there is still a little bit of uncertainty and a little bit of concern out there. So while people are still appearingly happy to buy stocks, then you have to look at what could be safe haven areas just to protect what they've got in case things go wrong, rather than just coming out of stocks. Or some of the bullish, maybe commodity-based currencies, or even bullish commodities. What would provide protection? And gold certainly would fit the bill, especially if there is tensions, geopolitical tensions, which are nothing to do with data. But then kind of you bring the data picture in as well, and that may well also adds to the popularity that gold could see. Now, it doesn't necessarily mean that that comes to fruition, but if there's nervousness, then people need to make sure that they're hedging their bets a little bit, and it could come up here and go beyond. Who knows? But I quite like gold for that fact. And also, when I look at the other potential areas for protection, the dollar yen isn't really breaking down with any kind of gusto. Now, I have put a sell order in the market for dollar yen, and I would still hold by that. But this hasn't really broken down a pattern, especially when you look at this along here. That would suggest that this area is held out. It's a broadening pattern, which is probably the most hideous type of pattern to try and trade.
Yes. Yep.
But it's just more of an indication that people aren't necessarily putting their money into the yen as they are trying to find protection. So I quite like gold at this level. I think gold is a buying opportunity. I think gold is a buying opportunity at this specific price, and I think with stops anywhere really, probably under this bar, I think would be more than palatable down here.
Well, I can back you up.
If
you go when you finish. Sorry.
Yeah, no. Well, I was just measuring that out, and that would give us a almost 2-to-1 trade there if it was to go to the trend line.
If you go to the daily chart.
Daily chart, yeah.
And put in what you would consider to be the neckline is probably horizontal. I've got a little bit offset, so the low at January 16 or 14 or somewhere.
Is it a horizontal level or is it a trend line level?
It'll be a trend line.
Okay. So January 14.
Around about there somewhere.
Yeah, this one here.
Yeah, that low.
Yeah.
And then put it through the low at March, whatever that is.
March 27th-ish. No, that's this one here.
6th, 7th, 8th, 7th.
Yeah.
That one.
Yeah.
So you put a trend line through there.
Yeah.
Yours is a bit different to mine, but not much different. You can see the potential for a false break happening of that trend line.
Yes.
And today's candle will confirm to me that if price were to go above today's candle, it would go to the trend line at least, the resistance trend line.
Yeah. Yeah, I mean, as I say, I like it here. I like it at this particular level.
Yeah, well, you're ready to go already. So, yep.
Yeah, I think so, and I also think that that there's probably enough reasons out there to suggest that it could be here as well. So so gold is of interest. Let's get onto the Aussie as well. You had a trade in Aussie yen, and I still think the Aussie yen is going to be a great trade next month, and it looks like there may well be an opportunity with this. Because
I'm out of that. You knew that, didn't you?
Yes, yeah. I think you got out just the right time, because the way I'm,
wasn't it?
Yeah, I mean, this is an inverted head and shoulders down here on the 4-hour chart, and I would look for a push back to the upside, but when I look at this chart here on the Aussie yen, then I think there's enough along these areas here to suggest that that coming into this area, there may well be some further trouble for the Aussie yen. So I like this one for some downside, and I think maybe the statistical evidence which suggests that next month is the time to do it would lead us up here by Wednesday, Thursday time, and sometime in the next month this is going to start to weaken, in my opinion. Now I don't know how long that takes; it could take the whole month, but if we can find the high, whether it's here or whether it's just that little bit higher, this looks like a much more solid level. But if it comes all the way up to 79.61, then the Aussie yen to me looks like a really good trade for some downside, for looking for downside. So, gold long at this particular level, I think Aussie yen with a little bit of strength coming into next month would be a shorting opportunity. The yen does tend to have a pretty good May, so that might also put the breakers on things like stocks. And in many respects, this would agree with the gold trade as well. If gold was able to, gold tends to rally 50% of the time in May, so it's not a huge statistical probability that that gold continues to the upside. But if there's any kind of shaking in the world economy, or maybe even that trade war dispute, then I think the yen will be a beneficiary, and I think gold will be a beneficiary, and I think the Aussie could be a bit of a lookout currency for the next period, coming into the middle of the quarter.
Wouldn't you like to have been a fly on the wall in that meeting between Kim Jong-un and Putin?
Oh yeah.
You imagine what the subject, they come to that bloody idiot across the ocean there, that Trump maniac. We both had yaks to him, and he goes back and reports something completely different to what we've been saying, what the meeting was about. What a dickhead. Why don't we just go to war against him?
Yeah, absolutely. Do you know, it's a difficult thing, isn't it? The whole thing with the king. Well, it's not that difficult. I mean, obviously, I've got no sympathy for Kim Jong Un's stance. I don't really think going to war and dropping nukes on any country is the answer for any kind of dispute, and it's certainly going to be potentially the end of the human race if that does happen. But the thing with Donald Trump is that, I mean, I wouldn't go quite as extreme as saying that we are kind of back to World War II era kind of rhetoric, but it does have a little bit of a flavour of that, with all this protectionism and nationalism kind of coming in. That's where problems in the world seems to be caused more often than not. When we get these kind of stances from these leaders. Now with Donald Trump, it may, the reason I'd fall short of suggesting that that Donald Trump has got fascist tendencies is because Donald Trump is a businessman, and the way that he understands to do business is by meeting his adversaries with fire. So you don't really know whether his rhetoric is is all out xenophobia and racism, or whether it is just his aggressive stance on how he does business being brought in to the national arena. So but it is concerning. The way he speaks is very, very concerning, and I think the reason it's concerning is because I don't think he recognises that he is now a national leader. It could just be just out and out stupidity, the way that he approaches what he says to the rest of the world, but it may well be something a little bit darker than that, and none of us can ever really know that unless we know Donald Trump intimately. I don't think, because he seems to almost illuminate both aspects. He seems to illuminate sometimes that what he says about some of the far right groups, being not being to blame for certain things, seems to be obviously that kind of racist stance. But then he says something so ridiculous that you just wonder whether the guy is just a little bit ignorant. So it's difficult to know, isn't it? Where it is with Donald Trump. But certainly, what I do know is that the last thing that we want is the leader of the free world to have the kind of stance that actually reflects quite the opposite and we've seen this before, as I say, during World War II.
Yeah, look, we had a complete narcissist in World War II as well. We've now got a complete narcissist that's on the other side of the planet, but difficult to deal with, without question.
Yeah,
because of that business attitude. It's win at all costs. It's my way
yeah,
or the highway.
that's the
There's
thing.
no negotiations. It doesn't.
Do you know what concerns me, mate? Is the you know, I wasn't around in World War II, obviously, and I haven't spoken to anybody about this, but I'd like to know what the perception was of Hitler. Was he seen as a bit of a joke? Because if that's the case, then is Donald Trump actually a lot more dangerous than we recognise, because we are discarding him as a little bit of a joke? You know, could he actually?
Point. Yeah.
You know, could he actually rally enough support from extremes, the extremist side, to do something a lot more dangerous? I don't think so, but I don't know. And as I say, the only way we'd know that is that, you know, looking back through history, was the previous kind of guy that spoke in a similar but not exactly the same way, you know, perceived as somebody that should be ignored because he was just the rantings of an idiot and a madman, because, you know, they
yeah. It's kind of like that, isn't it? It's very. You can certainly see the parallel that you're drawing, and that's concerning because I think Hitler certainly was taken far too lightly for too long, until it was too late, and then, of course, we all know what happened. I would tend to think that Trump has got too much skin in the game to cause such an event, or to destroy his own empire. You know,
yeah,
and that's what ultimately would happen if he went to war.
Yeah.
Certainly into World War.
Well,
everyone knows the outcome of World War is not good.
No, I mean, a World War III would
never
be
great.
It could be all over, couldn't it? With a World War III, I don't think the technological advancements of weapons. Do you know what I was thinking the other day? We've got Trident over here, and the UK obviously was one of the great powers in the 1940s and 1930s and 1940s. It was probably the number two, I would have thought, in the world at that time, after America. But we have slipped right down in the rankings, and for us to kind of hold these nukes, to me, to my mind, now seems a little bit arbitrary. And what I'd prefer to see is, rather than working on an attacking weapons system, I'd prefer them to work on a defensive weapon system. You know, so they could just plop down these nukes just from the sky, like kind of shooting clay pigeons. I don't know whether that technology exists, and they probably have them, but I'd much prefer to see them put money in that. So you almost kind of create some sort of force field around you, rather than worrying about having guns that fight the other way. I think everybody should be, you know, actually concerning themselves with defense, because that would be the way to solve the world problems. Is that people just go, well, I've spent millions of pounds on this nuke, and all it's just going to get plunked out the sky. So what's the point in firing it? You know.
I'm sure they do look at that very, very thing, but I think the defence is more. The attitude is more, let's dig a big hole and bury ourselves in it until the danger's passed.
Yeah.
Rather than let's stop it happening. Because I think the attitude is, well, if they're in the air, we got a problem.
Yeah, which would probably be realistic.
It certainly would be realistic. And you know, something that I guess we don't think about too much, because the actual thought is so horrendous.
Yeah.
And it's a self-protective mechanism just to keep it out of your mind.
Yeah.
Certainly that's the case with me.
Yeah.
I don't think about it.
Yeah.
And I wonder, is that a good idea that we don't think about it?
Well, in some respects, it's so far away from our control that you know, we'd send ourselves mad if we did. You know, it occasionally comes into consciousness when some of these world leaders speak in the way that they do, but the reality is we can't do anything about it anyway. And if it's going to happen, with our small amounts of power, I'm sure there's little bits and pieces you could do, but with our small amounts of power, then I don't really know how we could affect it positively anyway.
True story. I've been looking at your gold chart a little bit, and
I mean that's one way we can affect it.
I'm kind of good with that long, but I think I'd like to wait till tomorrow for me to trade it. But I can certainly see why you would be thinking that. The other one that you mentioned, dollar yen.
Yeah.
Dollar yen is a really tough nut to crack for me at the moment. And I saw last week the potential for that big explosion to the upside to be big. And it looked for all intents and purposes as though it was going to be. But as soon as it got through that level, and it happened in a heartbeat, and I can't remember what the news was that drove it, but as soon as it got through that, what level was it? Yeah, 112. So as soon as it broke 112, it just shot to the sky like a skyrocket. But very, very quickly, bang, straight back down and straight through the range, which, very unusual for dollar yen to stay in such a tight range for so long. When I say so long, it's a couple of weeks, and that's a long time for dollar yen to stay in the one spot, to be fair. And then when I saw this false break, I was calling this big and violent eruption to the high side, which looked like it was happening, but didn't last too long, as I say. And now we've come down to the low side. But interesting, look at those two candles. There's a 4-hour chart. Through the top of the range. Don't know what resistance it found up here. I'll have a look at that. Yeah, you can see there is resistance through here. It's not massive, but it's there. But immediately it pulls straight back, not only into the range being, let me put that range in so you can actually understand what I'm talking about. Let's say that was it. Came straight back into it and through it. And if you extend that to these lows here, if you want to extend that range, but I probably can't see that. But what I can see is this. And you were talking about this line here as well. That's key right now for me. And what I'm seeing right now with this current 4-hour candle is something that I do like, because if we find the weekly pivot and this horizontal level, which you can see through here, where price currently is, I'll put it on the chart. It's probably there somewhere. That's exactly where price is right now.
Yeah.
So if we were to get to the weekly pivot and pull back off it, I think I'd be very interested in getting short there as well. But that said, we've put in a double bottom at a confluence area, and a higher low here gets me interested the other way. So this is by no means, in my humble opinion, a fait accompli that we're going short. I can see it, but I don't know how far it can go. Certainly if it breaks this level, we're talking 110, 111. I can definitely see that 110.80, something, the monthly pivot, let's call it the monthly pivot. Of course, it's got 1 day left to do that, because the monthly pivot next month is probably here somewhere.
Yeah.
Which will be interesting.
Yeah.
It's going to cause another support level. Yeah, so I'm not 100% on board anything here right now, but I can definitely see the weekly pivot coming up. That's going to provide an opportunity to trade back to here, I believe, and that's probably what I'll be thinking at that point.
Well, there's certainly a lack of volatility today. The FTSE 100 is if we think about this as an open market, which could be a little bit of a indication of what's going to happen with dollar yen. FTSE is slightly bullish. It's around about 50% of stocks are around in positive territory, slightly better than that actually, and it has bounced off the level that I suggested as well. I'll bring you the chart. It does.
Remind me to talk about the euro pound trade that we were in.
Yes, I want to talk about the euro pound as well. Yeah, so I was talking about 73.77, and the price in the end that it bounced at was 73.73. So it came down a 4 pips from there, but it has bounced, and it's looking probably much more likely now to get up to the weekly pivot. Little bit unclear, but the FTSE is not ready to break to the downside as yet. So it's bounced off this daily pivot, and it looks like it's going to attempt to get up here. The market sentiment hasn't really weakened over the course of the weekend, and is still bullish. So I expect if these highs are taken out, then the weekly pivot will probably be seen. So that's what we currently have with the FTSE. Euro pound, yeah, let's talk about this euro pound. I don't know where you're at with the euro pound, but I still see this having a chance to weaken from here. I took
a short on Thursday, wasn't it? Was it Thursday?
Yes. Yeah, well, yeah. Let me hand you the screen so you can discuss it. I like the euro pound for a short.
Okay. Let me just get rid of that. And screen coming to me. Okay, should have it. Yeah, got in here and was trading the good old 1, 2, 3 or 1, 2 trade, which was this trade line. That's right. That's what I was using. So I traded the break and retest of this trend line or trade line, whatever you want to call it. I call them trade lines because they're not really trend lines. So what we got was the bounce off that day's, which was Thursday, as I said, that daily pivot, and it took us into the market, and I was feeling like that was going to be pretty cool. But then we got 1, 2, 3, 4, 5, 6 indecisive bars, pretty much at that exact level. As soon as I saw that, well, when I say as soon as I saw that, that's not true. I saw it happening. I wasn't willing to go into the weekend with the market there because I thought this was an absolute 50-50 call over the weekend where this would go. So I closed the order. I had 3 pips of credit in my account, which wasn't really enough to go on holidays with, but at least it wasn't a loss, I suppose. If you were still in this trade, you're probably at the exact level that I got out, or very close there too. Not quite. Am I keen to get back into this? Look, I am, but I want to see one thing happen. And if I go to the daily chart, it will give you pretty much what I'm looking for. Let me just go a little bit tighter. Let me get rid of these lines. What I see now is on a daily basis, the break back inside the range and underneath this, I can't really call it a trade line on the daily chart, but it's there. I haven't seen that retested, and I see the weekly pivot and the top of the range at that level. So I see a confluence area there that really should be something that the market would look at, in my humble opinion. Now, against that, we've got this little bar here that tried to get back to that area and failed. So again, without a whole lot of confidence, what I'm waiting for is that rally back to here, then look for a lower high, then trade it. Got everything else in place. We've got bearish engulfing bar. We've got a re-entry into the range, just waiting for that retest and lower high so I can actually get back into this with confidence. Had I stayed in the trade, I would still be thinking I'm okay because my stop is up here somewhere, and I still see this area here as the retrace level. So that's kind of where I'm at, mate.
Yeah,
If you're still in it, happy days. I see no cause for concern right now, but I wasn't prepared to go through the weekend with price here. But I see this pullback area.
it just looks to me like the pound is it's just having a little bit of strength, isn't it, this morning? I was looking at the pound Swissy earlier. Yeah, pound Swissy, kind of looking over here with the pound Swissy. It's caught at the weekly pivot and it needs to take that level out, but the pound Swissy looks pretty good, and they don't always, but they do tend to kind of have some agreement. That definitely looks like a potential reversal pattern here, but the pound's got a little bit of work to do, and I think if we can get through some of these technical levels, then we could well see the pound rally from this point.
Yeah, it's ifs though, isn't it? It's ifs
Yes.
and buts, and I don't see any reason to be confident that that it's going to. To be fair, I see, and we spoke about it earlier, pound US dollar, how we were at a bounce point, but really the momentum is very, very much in the bears side at the moment.
Yeah.
I'd certainly, at the very minimum, want to be looking for a significant higher low.
Yeah.
So break the weekly pivot, come back, retest it. That kind of fits the bill for me.
Yeah.
I think if I'm to go long on that chart.
Yeah.
And I'm the same with pound US dollar. I think it's the same thing.
So just a quick word on Mario Draghi. Now, Mario Draghi is, as we said, leaving fairly soon. What I hear is that his successors, I think Weidman is or Weidman, if you like, is one of them that people have talked about as a potential successor. They sound like they could be a lot more hawkish, and that may well drive the euro higher, and maybe that's what we need to see. I don't know, but there does seem to be something of a a discussion about the next the next European bank chairman to be a lot more hawkish than Draghi. I don't think Draghi was particularly dovish. I think he had what he had in front of him. I think if the data continues to actually be fairly solid out of Europe, which it looks like it could be right now, then the next central bank president has got a much easier ride, if you like.
He certainly has. He's got a much cleaner slate. He hasn't got Brexit to worry about, for instance. That should be done.
Yes, with any fortune that will be done. We don't know for sure, but yeah, it certainly looks that way, doesn't it? So that would suggest that the euro could be headed for some upside with some speculation. I suppose it's going to depend on who they get. That the market makers are going to be a lot more up to date on these candidates than I am. But maybe these candidates could well be some of the some people that if they go back through history and hear what they said when Mario Draghi took a specific position, then that may well be enough to bolster the euro.
Stranger things have happened, mate. That's for sure. The euro continues to actually confound everything that's thrown at it. It just keeps giving, I suppose, at crucial times.
Yeah.
Where it looks like it's disappearing off the planet and comes back and away it goes. Look, I still see it as being in deep SH1T right now. It's got a problem. And that's a technical problem, not a fundamental problem. And the technical problem is that it's almost in clear water to the downside.
Yeah.
It's all but there, 111 goes. I just don't see anything to support it underneath there.
Yeah, absolutely. I mean, it's just so incredibly resilient, isn't it? The euro.
Amazing. Every time it looks like going down there, it kind of rallies. This hasn't been the case to a large degree, however, since beginning of last year, I suppose. We've had consolidation periods without question. We had a bit of a rally in late or just after, must have been in the summer of, or the European summer of 2018 here. Where am I at? August 2018. So I guess coming out of the summer, we rallied 500 pips. That kind of is the only big fight back since we started the fall in January. I think it was January 2018. Yep. So we've gone currently 1,500 pips since then. And the only real rally back was that 500 pips that I just spoke about. Everything else has been failing to get through resistance every single time.
Yeah.
So this time is a little bit different. But it will reach a point. I've got no doubt it'll reach a point, and whatever that point is, I really don't know at this time. But it will rally again. I've got no doubt about that. Maybe if we put a measuring stick on it and go, all right, the first decline was about 1,000 pips. We went into consolidation. The next decline was about 600 pips. We went into consolidation. Currently breaking out of this range as we are, but I don't really see a top turnaround point. Maybe it's there. We're about 300 pips into that. So 1,000, 500, 250, 300. Maybe we're not going too much further before we get a rally.
No, I mean, it's like
maybe we're not.
Incredibly resilient. Just seeing the pound just stretch its legs a little bit against that pound the pound Swissy. Looks like it's trying to get above the weekly pivot right now. It's just currently trading just above that weekly pivot. I'm not sure what's driving the pound right now, but something is out there. Something's going on out there.
Yeah, pound yen's going really well. There was a trade there this morning. I see someone trading pound yen this morning. They've done a good job. Really, really good entry. And totally, I can see that on the 4-hour chart. If you have a look, beautiful double bottom, beautiful higher low, and away she's gone straight through the weekly pivot. I was actually waiting on that to come back off the weekly pivot, but it doesn't look like it's going to happen. Sadly, but yeah, nice trade there that I can see.
Yeah, it does look good, doesn't it? Does look really good.
About 1-to-1. Yeah.
Nice.
Mm-hmm.
All right, mate. Well, let's wrap it. I don't know if you got anything else, but let's wrap it up. I think a little bit of a waiting game today. It's a very, very quiet market. Not much going on. The pound is certainly the story of the day. Still like that gold trade. Maybe like you are. I may well wait for tomorrow, but because I need to see something of a bottoming out of this particular retracement, and if the retracement does bottom out, then I probably will take the trade. But yeah, so gold will be my currency of the day. I suppose
level 1280-ish,
1281. Yeah, somewhere around there.
Okay.
Yeah. So we will get back to this later on. We'll discuss and see what we got here. We're back in a couple of hours anyway, aren't we?
Yeah, mate, we are, and that's the original show.
Brilliant stuff.
What time?
Will it be 11 o'clock my time? So in about 2 hours. So we're looking at
around
about 6 o'clock Sing.
Happy days.
All right, mate. Same time, same trade time, same trade channel tomorrow. Thanks for listening, guys. We will see you in the original show if you have links for that. If not, we'll see you in the morning.
Hooroo.